Money Talk with Rina and Dad. Today we're going to talk about stock candlesticks. I know what candlesticks are. I saw it before. It's like this, right? Like this and this and this. Yeah, that's right. I read it in that book. Oh, you read about it in that book. Well, today I'm going to talk to you about candlesticks. So let's say that the stock value changes like this. But for example, when you see this represents time, and let's say this is 0. This is 1 o'clock. And this is 2 o'clock. It's okay to watch these patterns, but we don't look at patterns like this when we use candlesticks. Let's say this point here is 100, and this is 90, and this is 95, and then 110 here. You don't look at stock prices like this with candlesticks. With candlesticks, you see this 0 and 1, right? So that's 1 hour. Candlesticks represent how the stock price changes over the hour. Right now we have this curve here, but that's not how we show patterns with candlesticks. The starting point is here, and the starting price is $100. And then at the end of the hour, the price is 95. The closing price is 95, so that means that the bottom of the rectangular shape, or the body of the candlestick, will be at 95. The low point during this hour was around here before, right? So that's why we draw this line, and this is called a lower shadow. So this line shows how low the stock price went down within the hour. Now let's say that the stock price actually went up during the hour. Then we have a line here. That's how we represent stock price changes. For example, for here, the starting point is 95. The highest point is 110. So, for this candlestick, the starting point is 95. And then it goes up like this. But let's say that during this hour, the stock price went down, and then suddenly went up, and then down. In this case, the lower shadow is like this. The line that represents the highest price during the hour is called the upper shadow, and it will be like this. So this is where it started, and this is where it ended. When the stock price is going up, it's green. And when it's going down, it's red. Next example, let's say that the stock price drops from the beginning. The stock price went up for a little bit. It also went down a little bit. So what does this mean? Where's the starting point? It's here. Yeah, it's here. The starting price is here. It went up just a little bit and then just keeps on going down. But then at the end, it ends here. The stock price at 3 o'clock is right here, even though the price did go lower before that time. So in this case, the color is going to be different. It's going to be shaded like this. Okay, on to our next example. Next, let's say we have a candlestick like this. We have this really long line going down. It goes all the way to the bottom. So where's the bottom? The bottom point is 0. Let's say that the line goes all the way down to here during the next hour. So what happened between 3 and 4 o'clock? It went down. It did go down, but it came back up, right? And this isn't shaded, right? The starting point is here. It went all the way down here, but it went back up here. Yeah, that's right. This isn't shaded, so the start point is here. Now this should be shaded because the stock price went down. So the starting point is here. It went down and then went back up. So that means within this 1 hour, a lot of people sold the stock. But then people thought that the stock price won't go any lower than this, so they started buying a lot, and that's why the price went up. So this means a lot of people sold the stock, but then later a lot of people bought the same stock. What do you think will happen to the stock price after this? Go lower? Lower? Okay. The stock price dropped, so a lot of people bought the stock. They're saying it's a buy. That's why the stock price went back up. So what will happen in the next hour, do you think? It'll go lower? Really? Everyone is buying that stock right now. Well, you could be right, but generally it's said that when we have a long lower shadow, then the stock price will continue to go up in the next hour. So why is that? That's because people think the stock already reached the bottom point and can't go any lower. People want to buy it. That's why there's a higher chance the stock price will continue to go up. Then people think that's too high and nobody's going to buy it, right? Yeah, so then what will happen? No change in the price? Well, first, I'm going to erase all of this. So let's say that the candlestick is like this. And we have our lower shadow like this. People see this and then they think, oh, it's time to buy. Then the stock price is going to go up, right? Then more people are going to buy it, so it's going to go up again. Then people start to think, oh, people have already bought a lot of this stock. The upper shadow is long, but the lower one is short. People were buying a lot, but now a lot of the people are suddenly selling the stock. So what's going to happen next? Go down? Maybe like this? This means that the stock price is going back up again. It won't go up like this. In this case, so just like this one, there's going to be a lot of people who are going to sell. Then after that, again, there's going to be people selling. But then what happens when many people continue to sell? In this case, the lower shadow will be long, and then there's going to be people who will start buying. Then the stock price will go up. So these long shadows, like here and here, are really important. When you see a shadow like this, it means that the stock price may go up. And when you see this shadow, it means that the stock price might go down. That's because people are selling the stock. So here, people are selling the stock a lot. So then people think, oh, it's time to buy. And here, people bought the stock, but then they start selling. These are just predictions and not a guarantee that a stock price will change a certain way. Just like you said before, it's possible that this stock price will go down. But these are predictions, or signals as we call it, and in this case, it said that the price will likely go up. It's just a possibility, so it's not a 100% guarantee. Candlesticks make it easier to predict how a stock price will change. Let's say we're looking at a stock chart. It's going lower here and then going up. So what's going to happen after this? Up, maybe? You don't know for sure, right? It might go down like this or up. You don't know for sure because these are just lines. When the stock is like this and you have a candlestick with the lower shadow showing like this, then you can predict that the stock price will likely go up. But you can't tell if it's going to go up without this candlestick, right? That's why candlesticks are good for analyzing stocks. Stock charts like this just show you the change in stock prices. It doesn't tell you at what point people are buying and selling. It just says the price is 110 here, then now it's 95, then going up, and then 120. That doesn't tell you if everyone is buying the stock or selling the stock. Well, this looks like people are selling the stock here. Yeah, it does look like it, but the price could go up here, like this. How are you going to predict that the price is going to go up, like this? I'm just gonna watch the chart. So that means you don't know, right? If you look at candlesticks and the changes in the candlesticks, you can tell that people are buying a lot here, and then decide that it's a good time to buy. Okay, so end of class, says Rina. Now Rina and Dad are looking at a comic book about stocks. This is what Rina is reading right now. And there are many comic books in Japanese about stocks, and it's written in a way so that learning about stocks is pretty fun. Thanks for watching our Rina and Dad's Money Talk series. Please subscribe if you enjoy our videos.